Is the real estate bubble ready to burst in California and around the country? I did my first economic update about a year and a half ago, probably March in 2020. I saw things a lot clearer back then. It was gloom and doom out on the street, and people were worried about economic effects of the COVID. And I did my first economic update, and I was very, very positive. So here we are a year and 3 months later. All the markets are through the roof. Real estate has appreciated in the past 6 months at the highest pace that I certainly remember. Palm Springs, California, real estate went up 60-80% in the past year. Where are we going, guys? I'm a lot less certain today than I was 15 months ago when I tried to do when I did an economic update on the COVID situation. But what are the driving forces today? I'm a lot more cautious today than I was, and also a lot less certain. But there's certain things that we know for sure. Okay, inflation is here, and it's here to stay for the foreseeable future. Eventually, the markets will take care of themselves. But with so much government intervention, we don't see the effects of the inflation every day, but builders see it. People that are looking for cars see it. Lumber prices, other materials, building materials going up. There's no chips for the new cars. Labor is more expensive. It's probably going to be the first one that's going to level off when people go back to work, but inflation is here, guys. When markets will level off? Probably not in a year. So why do we have a rising inflation but still low interest rates? As I mentioned in my previous videos, the biggest reason the real estate will drop next time are the interest rates. So government tapering. You may have read about it, but basically government is buying mortgage-backed securities, therefore dropping the rates. The more paper they buy, the lower are the rates. So we don't see the effects. We see rising real estate prices. We still see low interest rates. And based on what Fed is saying, they will continue buying mortgage-backed securities for the foreseeable future. So it's not here yet, but be careful. The minute government stops buying mortgage-backed securities, interest rates will go up, and it will have an effect on the interest rates. So what's happening now is the same thing that happened 15 months ago, but in reverse. We had a herd mentality stating, hey, get out of the market. So stock market, bond market, gold, all the markets dropped, real estate. So very briefly we had this run on all the markets, people pulling money out. Today everybody's investing in everything. Real estate, Bitcoins, my favorite, stock market. Be very careful, guys. Make smarter decisions. It's not about speculation in the next year. It's about smart decisions. Should you pull out today? No. Should you be careful and smarter with your investments? Yes. On real estate front, stop speculating and look for cash flow. California real estate is going up over a long period of time, 7, 10, 20 years. Absolutely, but be smarter about it. Look at cash flowing properties, or look at value add properties. Don't think that buying today will automatically give you a clear path to selling it at a profit in a year. So lengthen your time horizons, look for cash flows, look for value add, see what you can do with the properties, churn the tenants, improve it, bring value, but don't invest with a short-term mindset. Market will turn, probably not in the next year, but something will happen. Interest rates will go up. That's another point. those of you that are building, flipping, developing, be very careful if one of your exit strategies is keeping the property. If you're getting into hard money loans, make sure you'll be able to get out of them. Make sure you have multiple exit strategies. If you're buying an investment or a flip, normally your exit strategy, fix up the property and sell, you should have a backup exit strategy. Okay? If you're getting a hard money loan, your exit strategy is refinancing out of it, yes, absolutely. Still have a second or even third exit strategy. Markets will change. They're not gonna, in my opinion, they're not gonna crash, but they will start going down. If not in a year and a half, maybe in 2 years. But again, make smarter decisions today. See where the herd is running and be one of the more intelligent ones of that herd, because lending guidelines are more relaxed now than they used to be. You see a lot more no doc stated income products. You see, this is 2005, 2006 all over again. So prices are going up, and rates are still low, and there are a lot more lending products. This is what my company does. We lend money. We do hard money. We do non-conventional financing, private financing, but be very careful. Have multiple exit plans. Just to recoup all that, I mean, things are good. Don't forget, the government will continue printing money, will continue spending money. Government will continue tapering and buying securities. Interest rates will remain low for the next few months. They may even drop lower. But if you're looking at 6 to 24 months horizon, be very careful. I'm a lot less certain about what's going to happen beyond, but smart will win, herd mentality and speculation will lose, like it always does. Somebody's going to get stuck at the end holding that Bitcoin portfolio or real estate portfolio that they haven't had a chance to flip in time. So again, careful, multiple exit strategies, watch the inflation, watch the lumber prices, call me if you have any questions, and subscribe and like down below and let me know if you do agree with me or not. I know this thing was very vague, but real estate prices will adjust down, most likely not in the next 18 months, but rates will go up. Thank you guys, I'll see you next time.